Hey guys, how are we all doing? So Dan from Trading with Dan here. So I thought I'd do a quick video to just explain something that's currently going on in the world. A new intervention, a new picking of winners and losers by the Fed. I've probably explained this in my other videos. The world is very short of dollars. The rest of the world, obviously outside of America, has a lot of dollar denominated debts, and they need obviously dollars to finance those debts. So with asset prices not doing so well at the moment, so basically debt deflation, there are then in essence less dollars around to finance these debts. So this is causing a big problem worldwide, and this is part of the whole Triffin's dilemma of having a world reserve currency. And being the world superpower. But basically what is going on is that the Fed, to alleviate this, on the surface to alleviate this, is offering dollar swap lines to various countries' central banks. So they're basically saying, well, you can give us your currency and we'll give you this amount of dollars at that exchange rate, basically as a loan, and then you can pay us an interest rate that the Fed decides, and then that alleviates their dollar shortage problem, so then central banks can then distribute those dollars through their financial system, and then they are basically fine. So first off, the reason America is doing this is because not because out of the, do you know what I mean, the kindness of their hearts. They are doing it because of the fact that they don't want these countries that need dollars to actually sell dollar assets that they have, such as treasuries, and then even countries that are wanting to sell treasuries, they're offering basically a repo for those treasuries, so they still don't sell those treasuries into the market. So they're doing it basically to keep the interest rates low, to keep the bond yields low, because they can't have this selling into the treasury market that will then increase rates and literally just blow up obviously America's debt bubble. So that's why they're doing it. They're doing it for their own benefit. So that brings us to the point of this video, is that the Fed is choosing who it gives these dollars to, which governments it likes and which it doesn't. So notably, it's not giving any of these swap lines to China, but it is giving them to obviously Japan, Australia, Europe, Mexico, other countries like that. So it is weaponizing this, as obviously America weaponizes everything financially that it can, and everything non-financially too. But so it is weaponizing this. But right, so that brings me to the point of this video. So obviously there's a lot of investors in gold and gold mining stocks and precious metals. And what we have a lot of precious metals are precious metal mines are in countries that are on the, in inverted commas, naughty list. So the countries that America, the Fed, isn't extending these swap lines to. So there's a saying about gold, that God created gold and then the devil distributed it around the world, because it just seems to be that they are in basically difficult places. Like gold mines often tend to be in countries that are quite unstable. Often, do you know what I mean? Not obviously all the case. There's obviously some big mines in Nevada in America, but a lot of them are distributed in pretty unstable countries. So basically, these countries, and including one that's done this already, Papua New Guinea. This was in the news a couple of days ago, May the 1st, a couple of days ago. They're basically Papua New Guinea are threatening to nationalise the mine, because obviously they are not getting these dollar swap lines, and then just think, well, okay, we'll just grab whatever assets, whatever things we can then, because we are basically struggling for dollars, struggling economically. So you'll see that a lot of countries that have these mines, and obviously Barrick is one of the biggest gold producers in the world. So basically, if it can happen to them with their mines, it can happen to any producer anywhere. So this whilst this isn't necessarily a risk for the price of gold, this is a massive risk, political risk for for basically royalty and streaming companies and gold miners. So if we go over to my Twitter here, I've got these charts from Marin Katusa, and he has basically shown the swap exposure to basically countries that America is giving dollars to via the swap lines and countries that it isn't, and then obviously where their mines are. So wheat and precious metals, you can see this amount of their gold mine, they're basically their income, their gold that they produce per year is in this percentage is in positive swap line countries, so good countries that probably aren't going to nationalize these mines and kick off because they're not on America's naughty list and don't need the dollars as desperately. And here's the red ones that don't. So as you can see, Franco-Nevada has a lot more exposure to these countries with negative swap lines, basically no swap lines. Say negative, no swap line, yeah, without swap lines. And then see this one's a little bit over 50-50, and then this one here is pretty much all exposed to regions with good ones. So these are the gold mining companies. So if we now look at these are the sorry. These are actually the royalty and streaming companies, sorry, not the actual miners. So these, if you know what royalty and streaming companies are, they basically provide finance to gold, precious metal miners, juniors and obviously majors as well, and then they take like a stream of gold from those as a payment going forward from those mines. So that's how they sort of get paid for the financing they offer. Yeah, sorry, these are the gold producers. So you can see Newmont with obviously a lot more green than red. Barrick, which is the one we spoke about, which is roughly 50-50. And then we've got two here that are fully exposed only to countries with bad swap lines. And then we've got one here that's fully exposed to only countries with good swap lines. So yeah, that is something to think about if you're invested in gold companies, because the market isn't differentiating this risk at the moment. And interviews with the CEOs and the people that run these gold mines weren't even considering the fact that which countries the Fed was giving money to and which it wasn't. So they're not even the companies themselves. Obviously they're going to be looking at it now that obviously it's becoming more apparent what's going on, but they were basically asleep at the wheel for a little bit. So I do think these differentials will start to play through the market. So say you were gonna set up a hedge trade, because that's obviously the best way to trade hedge positions. You could go short one of these and go long one of those. So basically you short these bad swap line countries, long the one with no exposure, hedged out from market risk, hedged out from gold risk in the same sector. So yeah, so there you go. It's an interesting trade idea for you guys. But anyway, so that pretty much brings me to the end of this video. I mean, like I said, this was based on the perspective of obviously gold mining companies, but any country that has a lot of exposure to bad basically countries that America isn't giving dollars to, such as China. And obviously lots of countries have exposure to China, some have more, some have less, but the ones that have more, they're obviously, there's a lot more risk there involved now, with the breakdown of world trade, global relations, just the politicalness of actually the Federal Reserve itself, which isn't necessarily meant to be political, but now clearly is political on a world scale, let alone on just on a domestic American scale. But anyway, so thanks for listening, guys. Remember, this is not financial advice. I'm not a financial advisor. Always do your own research, and yeah, I hope you appreciate me getting up before 8 o'clock on a Sunday morning to bring you some useful information. But yeah, so I'll speak to you guys soon.